What's up, guys? Today I'm going to go over my Apple trade that I took on December 2nd and that I made around 61% on, which was a little under $3,000. So, to start off, before I even talk about the Apple chart, my kind of thought process behind this trade was that I was looking at the overall market. This is QQQ, it's an ETF that follows the NASDAQ. If you look on December 1st, which was Wednesday, we had this huge sell off at the end of the day. I think it was let's see, basically a 3.5% drawdown in the Qs, which is very significant. If you look at the daily, we just been on a kind of huge rip to the upside, and now we're kind of falling back. So after Wednesday's close, after this huge sell off, my thought process going into Thursday was that this thing sold off like crazy. There's people that are going to try to panic sell, but market makers are definitely going to crush them at the open, and they're going to take this thing a little higher. I wasn't expecting this thing to rebound all the way up here. I was thinking just a little bounce, and that most of the tech names, Apple, Netflix, Amazon, all those were just going to have it bounce on Thursday. So I looked at Apple before the market opened, and I was looking at this 159 area. If you look on the hourly, you can see that the 159 area is kind of a support for Apple. Over here was a resistance, broke out, ran to 166. It was supported here. There's support here. We broke below it, came right back above it. Again, held the level here. So I was like, all right, 159 is a very strong level. If the market does decide to bounce, I think Apple's going to bounce with it. We just came off all-time highs the day before, and Apple went down around 7% into the open of Thursday. So I was like, all right, this thing's a little extended to the downside. Maybe I can play the bounce here. So if you drill down to the 15-minute chart, or not the 5-minute chart, this is Thursday. All right, Apple opened and immediately went down to 157.78. Okay, so it went down around $1.20 below 159. But you have to know at the open, the market is just very volatile. All stocks are very volatile. Options are volatile. So usually the first move doesn't indicate what's going to happen the rest of the day, which is a clear example right here. So if you move up to the 2-minute chart to get a better look at this, you can see that Apple dipped below it and then just pushed up and closed literally at the top of this candle. Next candle went from 160 back down to this 159, but it bounced. All right. Next candle opened up. We broke below it, but came right back above. So my thought process was this could be an opening range break for Apple. So at the break of 160.28 level, 160.20 level, I'm gonna get in. I was watching the tape, and right when we broke that level, I saw buyers stepping in, huge volume increase. I'm like, all right, this thing looks good to keep going. So I entered at here. I have all my fills right here. I entered at 9:36 a.m. with the December 3rd, 2021 162.50 calls. All right. So I entered here. It pushed up in my favor very quickly. However, going into this trade, I knew I wasn't going to scalp it. I wanted to kind of day trade it. I wanted to day trade the bounce, but like I said, I wasn't expecting, a bounce back up to 170 all-time high. It's just, a nice little 50% retracement type thing, which is why I had a price target at 164 for Apple. So, I kept riding this thing, got to 161. I still wasn't selling because it was nowhere near my price target, and my stop loss was 159. All right. So then Apple and the whole market began, to turn around at this 10 a.m. reversal. Usually at 10 a.m. the market does reverse. So you can kind of expect the reversal here. So market reversed, and Apple went all the way down to, believe it or not, 159.03. All right, this thing was 3 cents away from stopping me out. If I got stopped out here after 3 cents, I think I would have been down around $1,800 on this trade. But I literally was 3 cents away from getting stopped out, and I never got stopped out because this thing just bounced off 159. Now, what I did wrong here was that Apple started running, and I wasn't even looking at it because I just had alerts on. So I was, my phone rings, it'll alert me if it got below or it got above this, this previous resistance. So at around, let me see when it was, started loading off at 12:18. So around 12:18 is where I started, selling my contracts, which I honestly had an amazing sell, but I could do a little better. But anyways, so we had this huge huge pullback, and then reversed again. The market was just kind of in a way was just going up, going down, going up, going down. So like, and I was reading Twitter, I was talking to my trading buddies, and everyone's like, "What's going on?" Like it just literally was going everywhere. It's just this is the volatility that's gonna happen when the market does pull back. So we had this kind of flag that we formed at 11:15. So I was like, all right, if we break this thing, I really think Apple's gonna start getting going. So we did break it, we held above it, and then we just kept riding this EMA. So what I did was at 12:18 when I saw this huge candle um, form right here, right before it, I started unloading. All right, and then this huge candle came up, and this thing broke 163. And my thought process was, this thing is breaking a psychological number, not even psychological, just breaking a whole number. This thing could just get crushed. I'm only $1 away from my price target. Let me just sell out. So literally this whole candle, I just kept scaling out, scaling out, scaling out until I was basically out of my whole position at 163.15. Apple then went to a high of 163.68, which still wasn't even at my price target, and it just kind of consolidated until it finally hit 164 at 2:15 p.m. So like overall, what I did good was that even though I did size up a little bit in this trade, I still followed my trade plan as if I was trading normal size. So this pull like this, I like if I didn't follow my plan, I would have sold right before. But 159 was my stop no matter what, and I followed that, didn't sell, and it led me the big win. So basically, to sum it all up, the good was that I followed my plan, even though I had some big size. The bad was that I sized up in the first place. So the day before, I lost. How much did I lose? Six. It was around $680. All right. So I lost $680. So the next day, and to go into this Apple trade, I kind of sized up a little bit in hopes of kind of making that money back, which I did, and I made like basically four times the amount. But that's you can't keep doing this in trading because when you constantly size up more than your account allows you to, one day or another there's going to be that one trade that wipes you out completely. And especially with options, if you don't know what you're doing, if you don't know how to trade options, if you don't know anything about risk management, you are basically setting yourself up to blow your account. So I don't recommend you trade options if you don't know what you're doing. I don't even recommend sizing up on options. If you are like, there are people that you could tell them any day, every single day, don't size up, don't do that. They're still gonna do it. So if you're gonna do it, don't do it with options because you will literally blow your account. So that was the first bad of this trade, and then the second thing was that I did sell too early, as a result of the big size. So I could have rode this thing at 164, and it did hit it finally at 2 o'clock. However, since I was already up, like once I saw that 3,000, I was like, let me just sell. So I kind of based my sell order on my P&L, which you should never basically do. I mean, like it's good, it's fine. Like there's a lot of people, I know people that don't look at their P&L at all. However, I don't think that's the smartest thing. However, I don't think you should dictate your trades based on your P&L. So by me selling a little bit early, that was kind of against my original trading plan. However, my sell was around 163.15, and this thing just hit 164. So I did sell near the top, which is honestly phenomenal. But I didn't let the trade plan play out to exactly my price target. So overall, just to recap, the market went dump pretty hard the day before. Was expecting a little bounce on Apple. Caught the bounce off 159. Made around 61% on this trade. So amazing trade overall. There are some things I can do better about, but overall, I'm really happy with how this turned out. This was an amazing, you know, well executed, I would say, rather than amazingly executed trade. And I mean, if you look at the next day, Apple came right back around this 159. So I'm not expecting the market to go higher. This was just a very aggressive sell-off on Wednesday, so I was expecting a bounce, and we did gap down. So I just kind of put it all together. I'm like, I'm just gonna take the long side for a quick bounce. So yeah, that's basically all I have for this. I know I keep saying this, but I'm trying to make more videos and just kind of keep on my computer and try to release them every week. I'm trying to make a video on how to start trading. Another video on I'm just gonna start doing my trade recaps on YouTube because it's just easier for me, and I feel like it's easier for you guys to understand my reviews rather than just me posting it on my Instagram. Um, so yeah, so that's basically it. I hope you enjoyed this video. Leave a comment if you need clarification for anything, and yeah, hopefully I'll see you in the next video, and hopefully it's not in like a year. Thanks for watching.